Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Friday, made it to the end of the week. It's the last trading day of July. Stock market's actually down a little bit, about 100 points on the Dow, about 100 points on the NASDAQ. What I want to talk today about is the market top. I think we're getting really close to the market top if we did not already hit the market top. Maybe we did. Now, calling a market top is a fool's game. Nobody knows for sure, but we are very close to the market top. Now, why do I think this? Well, it could be the PE ratio of the S&P 500. It's at about 46 to 1. 46 to 1. Normal's about 17. That could be one of the reasons. What about the Buffett indicator, the total market valuation to the GDP? Now, what's normal on that? Well, Buffett says if it's below 100%, the market's cheap. Above 100%, the market's expensive. What are we at? We're at about 240% on that one. What about the gold to Dow ratio? The gold to Dow ratio is about 20 to 1. It takes 20 ounces of gold to buy one of the Dow. Now, what's normal on that? About 7 or 8. Now, what about the VIX? What's the VIX telling us? Well, the VIX is telling us that it's 10 times more likely that the market's going to go down in the next 2 months. 10 times more likely. How do I know that? Well, it's a put to call ratios. You can buy puts for about 50 cents where the same call is about $5, about 10 times as expensive. So all of those indicators would tell us that the market is severely overpriced, and it's much closer to a top than a bottom for sure, but it's over double. It's almost triple of where the stock market should be. This means that it could come down by at least 50%, maybe 80%. But these are not the reasons that I think we hit a market top. These are not the reasons. Now, what else do I know about the stock market? Well, I know that it's normal to have a correction of 10% every year, usually twice a year. Now, this whole year of 2021, we've had no correction. We have not had that correction yet. So it's very likely we're going to get one coming towards the end of this year, because we haven't had one for the first 7 months. So the last 5 months, we're probably going to get one, and it could be a lot bigger than 10%. Okay, is that why I think we're at a market top? No, I don't think that's why. What about the eviction moratorium coming to an end over the weekend? Millions of people are going to be evicted. Is that why the market's at a record high? No, that's not why. Now, what about the debt ceiling? Donald Trump, he suspended the debt ceiling for 2 years. That expires the end of July 31st. The debt ceiling comes into play. Congress has to raise the debt ceiling. Is that why I think the market's at a record high? Well, the market is at a record high. Is that why I think it's at a top? No, that's not the reason. So, Mike, what could possibly be the reason? If those aren't the reasons, what could possibly be the reason that the stock market has hit a record high, has hit the top, and is ready to come down? What could possibly be the reason? Well, let me ask you a question. How much would you pay for a company that's losing $4 billion every year? How much would you pay for that company? Well, they just paid about $32 billion. Now, the company loses $4 billion a year, but yet they paid $32 billion for that company. Which company am I talking about? Well, I'm talking about the company Robinhood. They have the stock trading app. They just went public yesterday. They raised $32 billion. But the company loses about $4 billion a year. 2 quarters ago, it lost $1.5 billion. Last quarter, it lost $500 million. So just in the 6 months, it's lost $2 billion. So we extrapolate that out to a year, about $4 billion a year. Now, why would people pay $32 billion? $32 billion. Well, they do have 22 million people that use their app. 22 million customers. Now, that's a good thing, right? Well, not if they're losing $200 per customer per year. That's the roadmap they're on. Now, this Robinhood went public, right? Okay. It went public and raised, well, the price they went public at was $38. Now, what did it do on the first day? It already dropped 8.4% on the first day of trading. Now, it's down another 3% this morning, bringing it down to around 11 or 12%, down from where its opening price was. Now, this is the worst IPO for a company that has raised over $30 billion. The worst ever. Now, I think the second worst was it was Uber. Uber did not do well out of the gate. Now, usually companies, when they go public, you see that big pop up. Now, why didn't it get the big pop? Well, like most companies, when they go public, you see the employees, they get a lot of shares of the stock, and they're not allowed to sell those shares for 6 months. 6 months they have to hold on to their stock. But with Robinhood, what'd they let them do? They let them sell 15% of their stock on the very first day so that they didn't have to be the bag holder. The general public would be the bag holder. So they could sell their stock on the first day. And apparently a lot of people did, because that stock's still going down this morning, still going down more than 8.4% the first day, 3% the second day. Now, what else was very interesting about this Robinhood trade? Well, 1/3 of that $32 billion, so over $10 billion, was sold to the Robinhood traders themselves. That, a lot of times they don't sell to the retail traders, but Robinhood, they were being generous. They go, hey, we're going to let you guys buy our stock. They sold 1/3 of the shares to Robinhood traders, Robinhood customers. Now, so they sold them over $10 billion worth. Now, it's already down 10%, so they've already lost over $1 billion. The Robinhood group is already down over $1 billion. Now, wasn't that nice of Robinhood to sell their shares to the customers so they could be the bag holder for this stock? Okay, but that's not all. Now, Robinhood, why'd they go public? Well, they went public, I think, because they're running out of money. Now, they ran out of money with the GameStop explosion. Okay, they had to stop trading on GameStop. Now, that cost them. Now, who came in and fined them? Well, the financial industry regulatory authority came in and fined Robinhood, the company, $70 million. They fined them because here's what they said they did. They caused significant harm to millions of their customers. Okay, Robinhood, it went public. Now, this is why I think that we have hit a top in the stock market. Yes, I think we finally did it. We've reached the top. We are maybe not the exact top. Maybe we'll go higher. I mean, the Federal Reserve can come in and still print a lot of money, right? They can print as much money as they want. But I think we're due for that correction. I think we're going to get at least a 10% correction in the next 2 months, either August or September. Those are the typically weaker months. October is also a weak month. We don't hit the strong months till November and December. But August, September, and October are typically weak months. And we haven't had that correction yet this year, that 10% correction. We get a 10% correction every year. Usually we get 2 of them during the year, but maybe we'll just get one great big one this year. Now, it's very unlikely that happens at the end of the year because November and December are very strong. So I think there's a very high likelihood that in August, September, and October, sometime in that next 3 months, I'd probably even narrow it down to the next 2 months because I think it's coming quickly, and that would be August and September. We're going to get a pullback in this market of at least 10%. Now, this is just my opinion. I'm a stock market gambler. You guys know that. I mean, I'm just a guy here, got a computer. I've got a microphone so people listen to me. Look, at what I say you may disagree with, and that's fine. It's good to disagree. That way we can get discussion about, what's really happening in the marketplace. I'm not always right. I'll openly admit I lose about 30% of my trades I put on. 30% of them are losers. Now, I see these guys on YouTube, and I love these guys, but they come out here on YouTube and they tell me they've never lost a trade. They just don't lose trades. All of their trades work out. They all make money on their trades. Well, I don't think so. Maybe they do. Maybe they're that much better than me. But I'm telling you, my opinion is that we have hit a market top. Now, maybe it's temporary. Maybe we pull down that 10% and we bounce off it and we come right back to new highs, record highs. We just hit a record high yesterday on the S&P 500. Now, today we're down a little bit. We're getting a little bit of the pullback, and I think we're going to continue that pullback. I think we are. Now, we'll see what happens. Now, if you like this stuff, give me the thumbs up. If you really like it, hit that subscribe button. Hit it. Punch it. I want to talk to you again next week because we got an exciting week coming. I think August is going to be a lot of fireworks. I know the 4th of July is in July, but I'm telling you, there's some fireworks getting ready to go off in this marketplace. So punch that subscribe button. Get out there. Have a great weekend. I'm Tall Mike, and let's talk again next week. Bye-bye now.